Hello everyone and welcome back. My name is Greg Furman and these are the market positions for September the 26th, 2017. Now our first trade for tonight is going to be in the Forex market. We're looking at the dollar-yen currency pair. Now, what I've talked about in this week's Forex Weekly Outlook is how basically the dollar-yen makes these moves, and we can see them over the last 6 months where we have a big move up, followed by a bigger move down, then a big move back up, and then down again. It's a very repetitive cycle with this particular pair, but each time it's not making any real new highs here. We continue to move lower over the last year or so. When we look at it from the bigger perspective here, we can really see it in these charts where we've basically topped out at 118. We then retraced back into the 114. We then took a bigger move down back up into this 114 where we've had significant resistance, and now we're back up in this area yet again. So whenever we do a short-term position, we always want to make sure we're looking at the long-term outlook here. So looking at that, basing it around the VantagePoint indicators, we have a new trend line that's formed up here at 112.80. So selling into that area is a reasonable play. Now again, I talked about in this week's Forex Weekly Outlook one of my favorite signals from VantagePoint, the medium-term crossing the long-term predicted difference in the opposite direction in which the market's moving. So you can see how the market's been moving up here, but the VantagePoint indicator is suggesting something else is going on. That's followed up by the short-term predicted difference, the strength indicator, and of course the neural index. Now when we look at our predicted RSI, basically we've hit overbought territory. We've seen this before, guys, this very same signal before when we follow the indicators down. Again, currencies are very repetitive. They're not like stocks, where stocks are basically the wild west of trading to some degrees because it's very difficult to predict their daily moves. Stocks on average moving 10% of their value per day. Currencies only move 1% of their values per day, and they're very, very repetitive on a month-over-month basis. So our key VantagePoint 18-day predicted moving average is at 110.83. That's a current downside target for us to look for. But combining these other indicators together with our drawing a proper trend line, we can see our short-term crossover from VantagePoint is saying that we've got a problem up here. So it's a very identifiable area. When we combine it with these indicators here, you can see we can get in a couple of days early on that medium-term cross. So when we bring all this together, guys, we then and only then go to that all-important daily report to fine-tune tomorrow's entry point. So when we know that area up there, we're stalling. The dollar has seen somewhat of a recovery, but not enough to really, in my respectful opinion, to change the overall trend of what's going on with the dollar-yen pair. So when we look at this closer, we're looking for a retracement to 112.23. We're then going to target all the way down to 110.94. So what we want to look at, make sure we're looking at the actual closing price, today's closing price. I'm just going to drag this up here. So 111.75 is today's closing price. We're looking for the market to move up to 112.23 so we can short it. So once again, this video is being produced at 6:30 p.m. Eastern Standard Time on Monday night, prior to the Asian Open on Monday evening, which is the start of Tuesday trade. When we look at our stops here, guys, all stops must be above 113. For your medium and longer term traders, I'd be putting my stop above 114. Okay, we don't want to get stopped out or fall victim to this broker radar. We want to make sure we give the trade enough chance to develop. And again, most of the dollar-yen's gains were on the back of the pre-FOMC announcement, and once they got the announcement, they weren't as actively buying US dollars. So very important that we understand that. Now our second trade for tonight is going to be in the US energy sector. We're looking at Southwestern Energy, the SWN stock. Now what I like about this particular stock is it's really taken a beating over the last 12 months here. When we look at this particular stock over the last year, very important that we're looking at it. This stock has been up in this, spent most of its time up around that $14 per share mark, and then it's taken taken a very big hit all the way down to this what looks to be a significant bottom forming at around $5 per share. So first of all, once again, with stocks, much like currencies, we want to look at the bigger picture here. So we've got a base down here around $5 per share. We know we want our stops below here, below that $5 mark. When we look at our VantagePoint 18-day predicted moving average, 577, 597, and 598 with a very bullish close of 612. So potentially, guys, this stock is just getting warmed up for a major reversal. Now our indicators are a little bit mixed here. That's par for the course, but we're basing it off of our, the main signals here. We've got that triple EMA cross. Our short term is moving back up, but our medium and long term crossovers are still very strong, and we've had that retracement back down to the VantagePoint 18-day predicted moving average, and it's held. So once again, that's a very important thing to look at whenever a stock has made a big move. We wait for a minor retracement, which of course has absolutely nothing to do with Fibonacci or Elliott wave or any of this stuff. It's simply people taking profit here. So where the market has decided to take profit and where it couldn't push below was the VantagePoint 18-day predicted moving average right here. That's a very important thing to point out, and you can see that we at the very next trading day, which was last Friday, we bounced off of it again, and then in Monday trade it's getting even stronger. So this stock looks like it's ready to start moving back up. So once again here, guys, once we've done all our homework on these other indicators, then and only then do we go into the all-important daily report. So with that close of 612, we're looking for a minor pullback to 589 so we can pick this up. We're then targeting 611 on an intraday basis. But once again here, guys, if this stock starts to get moving, we shouldn't have any trouble moving back over $7 per share.